Hello and welcome to another lesson of Forex Made Simple. Thank you for joining me today. Today we're going to be going through Ichimoku clouds and how to trade them. So this is lesson 8 of our advanced course. So as always, let's jump straight in. So firstly, what is the Ichimoku clouds? So Ichimoku clouds is a form of technical analysis which shows support and resistance as well as momentum and trend. It does this by plotting multiple averages on a chart in relation to previous and forecasted data. Now in this example here we're using Euro GBP. The Ichimoku cloud layout is behind it, going across the candlesticks. First view it does look very confusing, but we will work through it systematically and one by one. But just to go over the lines here, so the blue line which is here is representing the conversion line. The red line, which is quite close to it, is representation of the baseline. Then we've got the leading span A, which is the green line going across here. Then we've got the leading span B, which is this level going through over here, and then lagging span, which is this one here. So what do they mean? So the conversion line is otherwise known as the Tenkan line. It's a moving average incorporating the highs and lows of the previous 9 days. The baseline is otherwise known as the Kijun line, which is a slower moving average based on the highs and lows of the previous 26 days. Leading span A is the Senkou span A, which is the average of the Tenkan and the Kijun for the previous 26 days. So that's the average of the conversion and the baseline. Leading span B is the Senkou span B, which is a moving average for the past 52 days. And finally the lagging span is the Chikou span, which is a moving average for the closing price of the previous 26 days. So you're going to see here it works its way systematically. So you've got the previous 9 days, which is more a short-term momentum and trend, and then it slowly works its way to bigger and bigger moving averages, taking in larger past data. So you've got a short-term view and a long-term view of how that stock is moving. And then here are the clouds here. So you can clearly see you've got the red clouds and the green clouds. Green clouds equal a level of support. Red clouds equal a level of resistance. So whenever the stock is beginning to decrease, you'll always start to see that you're getting a red cloud beginning to form. As the red cloud gets bigger, it indicates a stronger level of resistance, which means when we hit this point here, the level of resistance was quite strong. As we saw the peak up here, it's showing that there is a level of support around this area, and it's a really strong level of support, which was an indication that we're about to see a drop. When it begins to drop, you can see on this part here the way the red cloud is quite thin, which shows us very weak levels of resistance. There are levels of resistance, but they are very weak, which means there's more strong momentum in the downward slope. So how do we trade using the Ichimoku strategy? First, let's look at a downward trend. So here you've got your conversion line, which crosses below the baseline. So as this blue line crosses over to the red and then begins to point downwards, that's indication that you're about to see a downward trend forming. You see a slight downward slope, we see a lower high form, but this is still on the bottom of the baseline at this point here. It nearly crosses but doesn't completely cross, showing that we've still got a downward motion. We see the green cloud forming. So the price breaks below the support, which isn't equal to an entry price. So once this breaks past the cloud, that's showing our entry price as we're now in a downward trend, and we've got the lower high forming here. And then the red line here just meaning that there was a level of resistance around this level here. The formation, as previously stated, we've got a very thin level of red cloud, meaning that there's very weak resistance as the price is going down. We see that the conversion line stays below the baseline all the way down, and we look as if we're approaching a level of crossover here, and we're beginning to see a thicker red cloud forming. So that's an indication that we're about to see a trend reversal back up, but we wouldn't enter until we've got confirmation of it crossing through the cloud. So main things to remember: downward trend, the conversion line crosses below the baseline, the price breaks below the support, which is equal to your entry price, and pay attention to how thick the red clouds are as it's going down, as it will represent strong levels of resistance and weaker levels of resistance, so you know if there's going to be continuation or not. So rules to remember: wait for a strong level of resistance to be seen, which is demonstrated with a thick red cloud. Once the conversion line crosses below the baseline, it indicates a downward trend is forming. Enter once the price breaks below the green cloud, which is demonstrating the price breaking below a support line. If we then look at an upward trend. So for this part here, you can see we've got the crossover at this level here and here, where the baseline crosses the conversion line and begins to point up. We've got a level of resistance forming where we can see it's quite thick throughout, as we're seeing quite strong levels of consolidation, no real major highs and lows at this area here. We see the cross through the cloud, that would be looking to be our entry price. We see the crossover, which is confirmation we're approaching an upward trend, and then we enter our price. It really is that simple when you get to use the lines and the clouds. So again, conversion line crosses above the baseline, price breaks through the resistance level, we put in our entry and we ride it up. Now we've got a second example for the upward trend, because on the previous example you can see that there's no real levels of support showing, which means really this was at the bottom peak and there was no levels of support, so it means when it does jump it's got a strong movement up, because all it is sitting on a strong levels of resistance. So for this example here, we've got a bit more green clouds and red clouds to show equal opportunity as to whether we'll buy or whether we'll sell. On this point here, you can see the peak at this point here, we get a strong green cloud forming. The moment we get our crossover, we could look to enter, because obviously the cloud's sitting quite low. So for entry wise, ideally you'd want to wait for a lot for the crossover down, but it does mean you're missing out on a decent opportunity. So that's why we do recommend you use some sort of supporting indicators. Or if you are quite a disciplined trader and because it's not following the exact rules and analysis, a lot of people would maybe just wait, move away from it and wait for another opportunity to enter. If we look at this position here, we've been on sort of a downward slope, we get the consolidation, the price begins to increase, we see the crossover, so the conversion line is now pointing up and over the baseline. It breaches our cloud, so we enter at this level of consolidation here, and then we ride it up on the upwards trend. Now, the rules to remember for an upward trend: wait for strong levels of support to show in the form of thick green cloud, wait for the conversion line to cross above the baseline. Confirmation for price entry is once the price breaches the red cloud, it's representing levels of resistance. For this example here, when it crosses through the support line, what's that showing is that this level of support is now going to become a level of resistance, which means we've got more momentum going up. Now, these rules are great to follow, but as you can see, it doesn't always follow those rules exactly. Sometimes it will establish a level of support, whereby you'd presume there would be a level of resistance. However, if it breaches across the support cloud, it shows now that that support will become a level of resistance. It means we've got more momentum going up. That's how it tracks trend and momentum. The trend is clearly identifiable by looking at the base and conversion line and which way they're pointing. As it goes in a downward trend, they both begin to point downwards. As they begin to flatten out, it's showing that that trend is now weakening and we're potentially approaching a trend reversal. And then as they point in the opposite direction, it now means we're in the opposite trend. As always, I really hope this video has helped. If you do have any questions with this, please feel free to contact us. We're more than happy to help. And thank you for listening.